this, and we are here on TradingView, and I will show you how to do this here, and also what the most important correlations and relationships for a forex trader are. So we are here with the US dollar Japanese yen, and let's just lay over a gold chart here, for example. So in TradingView we can do this here. We just go to compare, and then here you can type in gold or whatever. Let's just use the CFD symbol, doesn't matter. They're usually very closely linked. So you can see here, when we zoom out a bit, when the US dollar Japanese yen goes up, this gold chart usually goes down. And we can also use here the correlation indicator, which I think is very nice. So we just do this again. We use the correlation, and then you want to analyze you type in gold. And here we can see that this is quite true. So when the US dollar goes up, then gold goes down. And here we see that the correlation is very negative, almost close to -1 most of the time. And of course, it does not show here a causation or causal relationship. It just means that when gold goes down, the US dollar Japanese yen goes up, and the reverse. And this happens for two reasons. First, when uncertainty in the world occurs or exists, then people will usually sell their US dollars and go to gold. We can see that here. So here, let's say we see that the US dollar and the Japanese yen are going down significantly. For whatever reason, it does not matter yet, but here you can see it's going down. At the same time here, gold is going up, so you can see the very nice relationship here. On the other hand, when gold is going down here, maybe the situation in the world is relaxing. The investors and the traders are not as worried about what is going on in the world. Everything seems fine. Then gold is going down, and the investors are looking for higher yielding asset classes, and then they go to currencies, and you can see the price is going up here. So this is a first very good relationship. It really pays off. You can see that between other US dollar pairs. Obviously, you can play around with that. So you can just change here. You can change the ticker symbol here, and then we will see we have now the US dollar and the Swiss franc. Can get rid of this, and here you can see that mostly the correlation is also negative. Obviously, sometimes the correlations can change. This often happens when there's a sideways market here. Then the correlations will break down a little bit, because other drivers might be leading the price action, but for most of the time this relationship is true, and I think it's very important to know about them. Then here we can move over to the Aussie US dollar and the relationship to gold. We can see here now the relationship is mostly positive. This has two reasons. First, Australia is one of the biggest, if not the biggest, gold exporter, so the Australian economy is very closely dependent on the price of gold. So if the gold prices go up, then usually the economy is doing also better. And you can see here that the correlation is positive. On the other hand, the US dollar is here in the second place, which means that the correlation, as we've seen it before on the US dollar Japanese yen, is just the same in reverse. So those two factors are playing here into this correlationship nicely. You can see here the gold was going down here, the orange graph, and also so was the Aussie here. Then the Aussie started to rise, and gold also went up. So a very good correlationship here that is worth having on your radar and knowing about. Then, of course, we can also look at other stock markets, and here we now have the euro and the Japanese yen, and we compare it to the DAX, which is the German stock market. So the euro and the DAX are obviously very closely correlated, as the euro is the currency in Germany. And so you can see here that for the most part the correlation is positive. Obviously, there are some times when this relationship breaks down here, and other drivers can lead the markets. But most of the time you can see here that the correlation is very positive. In recent times the correlation has changed a little bit. So this is also a very good lesson here again, that don't be too fixed on one correlation or one direction of a correlation. Correlations can and they do change, but for the most part they hold true. You can also see when we go to different time frames, then the correlation is mostly or stays mostly the same. We had here more positive correlations. Basically, it just means that when the DAX is going up, and when the German economy is doing well, then the investors and traders, they mainly want to invest in the local stock market, and then also the currency is driven up when the investors have to buy that currency. So that also plays into this role and into this relationship. It's worth having that on your radar. And then here, another very, very important correlation here, we have the treasury yields from the US, and we have also the US dollar and the Japanese yen. So the ticker symbol for this one, if you want to try it out, is TYX, and it's the 30-year treasury note yield. And we have the US dollar, Japanese yen. The correlation here you can see is super positive. So the correlation and the connection between those two is very high. And it is obvious and it makes sense, because when the yield of the treasuries are going up, then investors can get a higher return, and then they will go and convert their local currencies, go buy the US dollar, and so drive this price up. So the higher the yield, compared also to other yields, then usually the currency will go up as well, and that's why you have this positive correlation. So it really pays off also to look at the bond markets. Bond markets are very popular among Forex traders, also among the banking, also among the big players, the bank traders and the hedge fund traders. So it really pays off to know the general trend here, and especially also to know the differences in the national yields between different countries. So it really pays off to know that as well as a currency trader, because the correlation is so closely linked. Then here, another very interesting feature in TradingView to understand the currency strength is that you can just use the compare feature and type in many different currencies, where one is the main currency. So you can see here I've added Euro, US dollar, the Japanese yen, Canadian GBP, the Norwegian krona, Swedish krona, the Turkish lira, all against the euro. And what this does is that it gives you this mess at the first glance, but when we zoom in, we can look closer and see who is the best currency, who is the worst currency, so who is the strongest one, which is the weakest one. And obviously we can see here the Euro US dollar is here at the very bottom, while the Euro and the Turkish lira is here at the highest level. So this gives you a good understanding of currency strength, who is the leader, who is the lagger. And so you can use that in your own trading. One word of caution, you should not look at the absolute values, because they change. So you should look at the trend here. You can see when we zoom out, this picture can change significantly because of scaling issues and the way TradingView is designed. But overall, you can see here that the trend is what you should be looking at. Who is the strongest, where's the weakest? You can see now that we have changed it. The Euro US dollar is not even the weakest anymore. It just changes depending on the time frame that you set here, so that the scaling here can adjust. So now you can see we're back to normal, but it depends a lot on how you scale and how much previous price history you're looking at. But overall, this is a great feature, and it helps you to understand who is the best moving currency, who is the strongest, where you should be looking at for a trade, where you have the best momentum, which is the weakest one. So you can see, for example, now we have here, this is now seems to be the best mover. You can see how we are strongly going down, whereas the other ones are still lightly here in a range or ticking up here. Here the Turkish lira is also going down a little bit, but you can see here the orange one, which seems to be Euro Japanese yen, is currently the one with the most downside momentum, whereas the other ones are lagging a little bit. This one is even going up, which is the euro, the British pound. The British pound is currently quite weak, which means that here this pair will go up, and you can see that quite nicely here with this view, and just using the compare feature and then pulling up many different euro pairs and just adding them one by one. So that's it for this video with the correlations. I highly encourage you to use the compare feature, and also here go to indicators, type in correlation, and then this is the correlation coefficient indicator from TradingView. You just type in the symbol that you want to analyze the correlation. It will always analyze the correlation against the pair or the market that is typed in here, that is the main pair, so keep that in mind, and then it shows you this nice correlation coefficient indicator here at the bottom of the graph.